time to get other experts. And you've got Neeraj Diwan and Devang Mehta joining us on the show. We'll also be joined a little later by C.K. Narayan to give us a technical view of the on the market. Devang, good to have you on the show. Today's sell-off, welcome it a bit because it was getting a little ahead of itself.
Yes, thanks Antil for having me on the show, and first of all a very happy birthday to you guys, maybe a little late in the day. But
we celebrate through the year.
Yeah, that's great. In fact, I think a lot of complacency was getting into the market participants during the last 1 week, and I agree with that sort of a thing, that money making was getting quite easy. Anything that you buy shoots up the roof. We talk about 20-25% per year CAGR returns, and people were making 20% in a day or two. So I think that was, in hindsight, I feel yes, that was actually riskier. But having said that, I think more of today's fall is to be something that has to be attributed to China and the stocks, the quality of stocks that are falling today. In fact, your metal basket, oil and gas, commodities, all these stocks are cracking power. In fact, power, metal, as well as the stocks that I talked about, all this were in fact showing great bit of weakness and has in fact underperformed the broader market, or Nifty to be precise. So I think this space has not done anything spectacular, and we still feel that this space will underperform in the times to come. And I feel that if somebody was waiting for an opportune time to get into the markets, and that sort of a complaint that we couldn't enter the markets at the right time, I think this is the time to accumulate good quality stocks.
Okay. Neil, would you agree? Good quality time to accumulate now, or do you think there are going to be some you can get a little later when they fall further?
Yeah, good afternoon, and congratulations for the ongoing celebration. And to talk about good quality stocks, I think it is a good time to start accumulating, because though I feel that we need to see where the market makes a base. Market was getting very hot in the sense that things were moving very fast. To example, certain stocks moved up by 30-40% in just 1 month. So you had to see this kind of a correction in the market, and I think it's a very welcome correction which was long overdue now. So, and if someone is a long-term investor, it is a very good opportunity, and I feel after this sort of a correction, you will get even a certain financial stock which had moved very fast, and other stocks will get affected with the fall in interest rate, which will happen in the next quarter or early next year. So I think good opportunity. One should look at these opportunities.
Would you buy metals? Hindalco down 11% for the month. Tata Steel, big loser today. That's down about almost 8-9% for the month. Would you get into metals now, or do you think you can wait for that?
I feel there is some weakness which is very evident in metal stocks because it's China effect also. But I think stocks like Tata Metals, one needs to start accumulating, but slowly. You can get another 5-10% fall from these levels, which is possible, which may or may not happen. But at these levels, seeing the year-to-date performance where Tata Steel is maybe 10% higher than the 52-week low, or maybe 10 to 15% higher. So I think it makes sense to start accumulating a good stock like Tata Steel, but one needs to have a long-term perspective for 1.5 to 2 years when you're buying the stock.
All right, while we were speaking, I think we're seeing, that mild recovery, totally U-turn. We're back down about 100 points on the Nifty. Some stocks you want to keep your eye on. We've lost HDFC from the green list altogether. That's gone into the negative, and that's hurting the Nifty. HDFC Bank also slipped into the negative a short while ago. That too is hurting the Nifty to some extent. While TCS and HCL Tech are holding up in the green just by a wee bit, we now have Tech Mahindra, which has also joined the list of positives, and M&M, which has made a solid move upwards. So you want to take a look at that stock. That stock has moved up substantially in the last 10-15 minutes or so, and has moved right into the list of barely 6 or 7 stocks that are in the green. On the losing side, Bank of Baroda is another one that you want to keep your eye on, because that one is down considerably as well in just the last half hour or so. So we're seeing more pressure on financials, maybe a little less on the IT space and pharma space, but definitely HDFC is hurting the index at this point. Anuj?
Indeed, Menika, just reading a tweet, why are we surprised by the fall in China? The rally was Chinese after all, so won't last for too long.
That's cruel.
Speaks volumes about the phone you bought.
I just love the fact that,
I just hope that didn't come up.
5%, but we'll take pot shots at the world's second largest economy. I love India for that, right?
was just a
हमारा
joke.
growth
I was hoping
5%, तो क्या हो
I
गया?
was hoping this would not come up. So
Yeah. This is a Chinese phone. Yours is a Chinese phone.
I can see the humor in the tweet. I'm just saying how much we love taking pot shots at other guys, right?
Indeed. But Menika, the market clearly has become weak, and as you said, the intraday rallies are being used to short rally or relief rally, whatever it is, that's being used to short. So quite clearly telling you that the texture of the market has become a bit weak. Devang, you were talking about using weakness to buy.
Right.
Any 3 or 4 names in particular that stand out in the mid caps, which have corrected quite a bit?
I think rather than mid caps at this point of time, when there can be a 1 or 2% correction still pending, and mid caps can be hammered out of shape, maybe 5-7% more. So I think precisely we would in fact start our buying or accumulation more in the so-called large cap or the large capish space, something like a REC or a PFC, which again is in fact a large size, I can say mid cap, something like REC or PFC, which in fact wouldn't fall as big as power would fall. And these are financing companies which in fact start getting its interest cost as soon as the financing is done. So we think something like REC PFC at something about 1.2, 1.3 price to book is really ridiculously priced at this point of time. So these stocks are where we would put our money into. We'd also start getting into something like LIC Housing or an M&M Financial, some NBFCs like Canfin Homes, all these stocks we would start accumulating. So something like NBFCs would be the theme going forward.
All right, CK Narayan also joins in on the show. CK, hi. Good afternoon. We were talking to you over the weekend. Does this surprise you, the kind of shorting that we are seeing in the market, and the fact that there's absolutely no buying which is emerging at lower levels?
Yeah, I think there has been some amount of selling which we saw on Friday, but then on Friday we probably attributed it to the general weekend profit taking. But the fact that there has been follow through on Monday and very clearly today, and there is complete absence of buying, as you rightly mentioned, it seems to indicate that certain set of people are indeed taking profits. This could probably be the institutional set. The FIs have been a little bit on the sell side anyway. Not really surprising considering that the levels are high and most of the events are out of the way, and we don't have anything to go for a couple of months. So I think some profit taking was on order, but then all of us were just waiting for when it would emerge, and it seems to have emerged from let's say Monday onwards. So not really surprising, but the fact that no buying is emerging at the lower levels is a bit of a change from the norm, because we used to see that buying emerge at the end of the day, which is not
CK, is this a breakdown on the Nifty at least for the time being, and how far can it take us down?
Well, I think if you were to call it a breakdown, it will be surely only from a very, very short-term perspective, because the longer-term trend line supports, if you were to use the, let's say, simplest of measures, that lies somewhere around 8250, and until that significant support goes away, you can't really call it a breakdown which is of a meaningful nature. In the shorter term, yes, it is a breakdown for traders of 1 day to 3 day kind of nature, and this has a potential for, let's say, about 8350 at the minimum, or if the selling were to continue, then 8250 perhaps.
Okay, what about the bank Nifty, CK? What's the level that you're watching out for? It's corrected quite a bit from the recent highs.
Yeah, I think banks were the ones where most of the traders had long position, and we can very clearly see that those longs are getting pressured, and that is sending the index also downward. Most of the PSU banks have also come in for a hit today. So I think we have substantial put positions which have been created at about 18,000 levels. So I don't believe we will drop down as far as that. I think around 18,200, 18,250, we should be seeing some amount of support emerge in the banking counters.